Hey there, and welcome to Real Investment News. I'm Mike O'Neill. The markets are staying kind of flat today. The Dow is up just 63 points, the S&P is up 6 points, and the NASDAQ is up just 27 points. Now, this year's jump in the stock market and the increase in real estate prices has actually increased Americans' household wealth to $96.9 trillion in the third quarter. That's according to the Federal Reserve, who notes that the economy is now in its third longest period of growth since World War II. And that may sound like a good news, but it's not necessarily the whole story, because this increase is mainly limited to the top 10%. The rest are carrying a record level of debt, and it's starting to have an effect. Now, take a look at this chart. You can see that how since 1959, even as consumer debt and the standard of living increased, Americans were making enough money to fill the gap. But in 2009, wages began to stagnate. And even as the consumer debt continued to rise, the gap between the cost of living and debt is bigger than ever. And that is starting to have concerns, because even with tax cuts, those in the bottom 80% are not going to be able to spend more, and that is not going to help the economy. And then there are the markets. Now, Bank of America says the S&P's 3-month earnings estimate revision ratio, known as the ERR, has fallen for the 4th consecutive month. And for the first time in 7 months, there were more negative than positive earnings in their revisions. And this is important because this is one of Bank of America's so-called signposts of a bear market, although it's not clear when it will actually happen. If you take a look at this chart, it's going to change here. Now, this has happened in the past. When it crosses up over the 1.0 mark and then it crosses back down, that's a sign that a bear market is about to happen. It happened over here in 89 and 90, and as you can see, it happened here for the 2008. But now we're looking at it, and we're still not sure when it's going to happen, because you can see we've hit it several times, even though the bear market has not started. But the folks at ZeroHedge.com who put together this chart note that so far 11 of the 19 signposts for a bear market have been triggered. Another one of them, the Fed's raising rates by at least 75 bips from the cycle trough. Now, we're up already 100 bips, and the Feds are expected to raise rates again when they meet next week. So we are going to be watching what happens very closely. That is it for now. Thank you so much for joining us. Please remember to follow us on Twitter and Facebook and subscribe to our YouTube page. I'm Mike O'Neill, and we will see you at the close.